Today, you're going to hear about a company that's recently won an award for being Forbes Asia's Best Under billion. There are 200 companies that have actually won in this award. Now, this whole Forbes Asia Best Under billion measures earnings growth over a 1, 3, and 5-year span. This company, let me not withhold it back any longer, is actually Nordic Group. If you look at this very select list, you've known I've mentioned before on this channel UMS Holdings, which is in the semiconductor space, as well as the Hourglass, which I once had a big position, but right now I've divested fully from the Hourglass. Nordic Group is also in this very select list, and I've actually known it for quite a long while. The reason I've gotten back into this company, looking at it a bit closer, is because in this year, it's made an acquisition in the defense business. Now, I'm big on defense because right now we see war situation happen in Ukraine, we see tensions in China, Taiwan. And defense business is always very security sensitive, which means there's usually a high barrier of entry. And it may be something that we need moving forward a bit more in this current climate. Now, PMD has also mentioned that moving forward, our world may not be as peaceful. That's why I believe that these assets could grow in terms of value moving forward. Now, the company they've acquired is actually Starburst. Starburst was previously listed also in Singapore. And as you can see in the image, they do defense, which means they create, those shooting range facilities and stuff. And the timing of this acquisition was actually quite beautiful. It was completed in January 2022 before the Russian-Ukraine war. So if you believe that there are gems in the Singapore small cap space, as well as you believe this Forbes list is worth looking into, continue watching on because I'll be dissecting Nordic Group as a potential investment candidate for you. Hi guys, welcome back. Without further ado, let me share with you the scope for today's whole discussion. The first is I'll be touching on the tailwinds to defense. The second, I'll be touching on the tailwinds that Nordic Group also enjoys by having exposure into the semiconductor industry as well as the oil and gas industry. And last but not least, I'll share with you my interpretation of what they are actually doing, what's their game plan, as well as how to simplify understanding this company, which has quite a few subsidiaries now already. Now, this is quite a bit of a mental exercise for me also. I enjoy doing that. I was just a bit concerned whether this topic is too niche. So really appreciate if you could smash the like button and let's do it early. So without further ado, let's start on the first part, which is understanding the defense through its recent acquisition of Starburst. Now, if you see, Starburst will now be contributing profits to the overall group. This is actually an extract from Nick's Insight. If this is true, Starburst is a high-margin business contributing 3.6 million pre-tax profit out of its 14.9 million revenue. Now, this means it's about a 24% gross profit margin. But the problem is Starburst wasn't always profitable. In yesteryears, it had certain loss-making years. The key customer segment comes from Middle East as well as Southeast Asia. And if Southeast Asia countries feel the threat of war nearby, I think it's reasonable to guess that sales might pick up in the coming years ahead. That is actually why I've initiated a position in Nordic. As you can see in this screenshot over here, I made purchases slightly before the April period of this year. Of course, prices have appreciated, but the key part is, when you make an investment, it may not pay off immediately. It is taken about half a year before I broke out of that price zone. And if you're wondering where this screenshot actually comes from, it comes from the platform MooMoo, who is today's proud sponsor. Now, if you're a new sign up to MooMoo, they actually have certain freebies right now whereby you can get free stocks. But more importantly, MooMoo allows you to see, like what I've shown you in this screenshot, where you have actually purchased and where you've sold. Not just that, it can give you in a quick glimpse certain financial indicators of the company if you're looking to do a deep study into it. And as of now, they have this $2 cashback every day if you're a new sign up to the platform, and all you need is just to make a $100 purchase into a Cash Plus fund. If you're keen, look for links below, and let's proceed on to the second segment for today, which regards tailwinds in semiconductor and oil and gas industries that may benefit Nordic Group moving forward. Now, if you have followed me to here, you kind of guessed that I believe that investing in semicon is not just into Nvidia, TSMC and AMD. Investing into oil and gas is not just investing into Occidental, which Warren Buffett has recently made some announcement that he may be purchasing even more, as well as into Exxon and Mobil. These are big oil giants. But within the industry itself, as well as the value chain, there are other players that benefit with a tailwind for the industry itself. Let me show you some summaries to Nordic and its exposure. What you can see in this chart over here is the first half 2022, they have now a new segment which is law enforcement, security agency, civil authorities. That of course comes in from the acquisition of Starburst. Then you also realize that the grey segment has been growing, correct, over the last couple of years. This segment belongs to the semiconductor industry and is mainly boosted now by the acquisition in 2019 of MV Pure. The problem is, if you are also like me not in the engineering space, these names are pretty unfamiliar. These services, we don't quite appreciate it, so we really need to trust companies' books as well as to track the financial numbers of things. They've recently made a new acquisition of Era Tech. That part I'll not touch on it too much because my main focus is on Starburst. Starburst is a big acquisition, and with this acquisition, Nordic Group is now having debt on its books. If you look, the net gearing ratio right now stands about 53%. We'll all be concerned whether interest rates will go up or not. But this is another extract from what Chairman has mentioned. He shared that he believes that based on first quarter 2022 EBITDA of $8.1 million, and if they extrapolate it for a year, it is possible that they become net cash, paying off all the debts by 2023. I've checked the books quite a bit, and depreciation is not a cash item. Interest, if you pay it off, also drops off the book. So this interpretation of EBITDA of $8.1 million extrapolating to pay off all debt, in my opinion, actually looks quite reasonable. And more importantly, they have a track record of doing so. If you see over here what I've circled, they've actually made acquisition, correct, of Ensure Engineering in 2019, whereby they've taken on debt and used some of their existing cash flow to make acquisition. And then they've scaled down that debt ratio in 2019. Then they've made a further purchase of MV Pure, which uses debt again. But then by 2020, they've successfully became net cash again when you see a negative 20% net gearing ratio over here. So my interpretation of the track record suggests that they know how to use debt for mergers and acquisitions. It's much better than a company that sits on a huge pile of cash and not know how to expand its business or buy cash flow generating businesses within its industry that it's familiar with. This leads to the third segment for today, which is my interpretation of Nordic Group's game plan. Now, it's quite obvious that Nordic Group is on a buying spree, at least over the last 10 years. They bought small businesses which they believe they understand well, and all these small businesses have their own niche and small addressable market. The bigger problem is none of them seem to be able to scale globally. They are more an accumulation of small businesses that are cash flow generative. One way we can see it is they become a collection of small companies that produces cash flow, which means they become very much like an investment arm. Or second is that they are working towards cross-selling, which is something they mentioned quite a bit. When they acquire clients in different parts of engineering, they believe they can cross-sell. And that's how they hope to increase the addressable market. If you look in terms of the books, this is another place to dig for clues. Realize that there's two segments that break down, project as well as maintenance. Project, you can understand it as lumpy, non-recurring engineering deals. The maintenance part, however, is more predictable. This is where after they sell a solution, they take on a 1 to 3 year servicing contract to maintain it, which is logical because any customer would want you to give guarantees and stuff, I imagine. And typically these maintenance contracts are lower margin. However, they are recurring, which means we can kind of predict them a bit more and they help tide through bad periods such as in 2020. When it comes to evaluating Nordic Group, I struggled with it quite a bit because I can't project with certainty. It's a bit out of my sphere of competence, and more importantly, Chairman Chang's ability to deal make is what is driving this whole growth within the company. If you see in terms of net profit, they've declared a compounded annual growth rate of 24%, but that depends on when you measure it. For me, I measure against the last 5 years, the last peak, and if indeed this year is a $23 million net profit, I think the compounded annual growth rate instead of 24 should be around 8%. So with a current price earnings ratio of 11 times, it could be fair value if the compounded annual growth rate is 8%, or it could be really cheap if the compounded annual growth rate is 24%. And I think how well profits will be in 2023-2024 really depends a lot on its latest two acquisitions. Firstly, MV Pure, which is in this segment, clean room, air and water services. This is a growing pie. The second part is of course Starburst, which is reflected over here as specialty structural engineering services. I'll be looking out specifically for these two segments, and if you happen to be in the engineering space and you know them a bit better, do leave in the comment sections what you think and we can all learn a thing or two further. And since you stayed to the end, I'll share with you a last point which encourages me to invest in this company for the long term. This can be picked up in their presentation report, and the message is very clear. Over here, in IPO in 2010, senior management own about 68% of total shares. Right now in 2022, senior management owns even more. Right now it stands at 75%, which means they've been buying back their own shares with their own cash over the last 10 years or so. In my opinion, it gives a lot of confidence that management alignment is natural already. And from every indication, this is a well-run company. So if you benefited from this whole discussion, smash the like button because it helps us reach a bigger audience. And as always, if you'd like to find out more about investing, smash the subscribe. We'll be covering some companies that are never seen on YouTube, on this channel itself, and I'll be touching a lot on retirement topics in the coming weeks and months ahead. And before I go, let me introduce you to some of my previous few videos. This one touches on a company that I believe is massively undervalued. I don't know if you've seen it or not. And this second one over here touches on ST Engineering, another household name in defense and a blue chip stock. So if you're keen to find out either of these, follow the tutorials over there and hopefully it can help you be profitable in your investment journey ahead. With that, sign off from here and see you there. Take care and goodbye.